Welcome to the Deep Dive. We're the place that takes your source material, cuts through all the noise, and gives you back the synthesized knowledge that, well, really matters. Today, we're diving deep into something pretty remarkable. A financial confession, actually, from one of the most private and powerful figures in global tech, Pavel Durov.
That's right.
The founder of Telegram, and VKontakte before that, the big European social network. He didn't just give Bitcoin a casual thumbs up recently. No, he dropped this huge financial truth bomb.
Yeah, it was pretty stunning.
He revealed that Bitcoin, BTC, has been the sole source funding his pretty high-level lifestyle for, get this, over a decade, since 2013.
It's a massive revelation. And look, here's why it's way more than just some personal finance story.
Yeah.
Durov he's one of the world's most influential voices, especially when you talk about tech that pushes decentralization, that challenges the old power structures.
Right.
So his testimony, it basically confirms that Bitcoin, for him, it wasn't just an investment tool. It's actually functioned as this strategic foundation for his freedom, for his ability to build something like Telegram, often under really intense scrutiny.
A platform known for that independence.
Exactly. So when someone of his stature comes out and says point blank that his decade of, let's call it, operational freedom and financial independence comes directly from holding Bitcoin long term, well, that fundamentally shifts how we should maybe view the asset.
Okay, so that's our mission today then.
Yeah, pretty much.
Yeah.
Our mission for this deep dive is to really unpack what Durov's long-term HODL strategy tells us about Bitcoin's own journey.
Oh.
From this volatile kind of fringe thing.
Cyberpunk money, some called it.
Right, cyberpunk money.
Yeah.
To becoming a serious strategic vehicle for preserving wealth. And crucially, what does all this mean for you listening, whether you're a long-term investor or maybe you're building something in Web3 today?
Okay, let's get right into that core fact then, because the timing, that 2013 date, feels absolutely critical here. His whole wealth management strategy, anchored in Bitcoin since 2013. We're talking about a period that covers basically the entire turbulent youth and maturing process of crypto itself.
It's the whole arc.
Yeah, and put it in context. Imagine a global billionaire, right? Someone who needs frictionless money, big amounts liquid to operate, travel internationally, finance huge global infrastructure like Telegram. And he hasn't been relying on the traditional system.
Nope.
No complex web of offshore accounts and fiat currency. No leaning on centralized banks tied to specific countries. Banks that, let's be honest, could be pressured or seized by governments that don't like what he's doing. His personal upkeep, his operations, managed through decentralized digital wealth.
And the credibility that brings is just immense, because this isn't talk, it's a demonstration. Practical sustainability. We hear all the time from executives, right? They speculate with company money or celebrities do endorsements.
Yep.
Durov, he's shown proof of his concept. He actively accessed, leveraged Bitcoin for 10 years to keep up a high-level global life. It proves the asset is liquid enough, robust enough to actually support serious, real-world needs. Financial requirements.
So it moves it beyond just, oh, it's a good investment.
Exactly.
Yeah.
It moves the whole discussion past just theoretical investment. It's now in the realm of viable, long-term financial architecture. It actually works.
And there's that philosophical angle, too, the freedom link.
Oh, absolutely fascinating. Because think about when he was building Telegram, this platform all about privacy, encryption. It was precisely during times when government regulation, surveillance pressure, all that was ramping up.
Right, when they'd want eyes on things.
Precisely. Now, if his wealth, his personal funds, were all tied up in the traditional banking system, well, that wealth is vulnerable. Tracking, restrictions, maybe even seizure, that could have just choked the life out of Telegram's development, right?
Yeah. And it becomes a leverage point. So this speaks to that idea you mentioned, the builder's hedge. For Durov, holding Bitcoin wasn't just about making money, the appreciation.
No, not primarily.
It was about ensuring his operational existence, his ability to keep building, stayed independent of state power, like a strategic defense. Holding wealth outside the system basically guaranteed that the project he was building, this decentralized communication network, could keep going even if he personally became a target of financial attacks.
Powerful concept.
That idea, state independence, it really forces us to look at the timeline again. You can't talk about his decision without thinking about what Bitcoin was actually like back then, over that decade. He jumped in when it was really just starting out.
Exactly. When he got in, 2013, Bitcoin was still widely seen as, cyberpunk money, or just a weird internet novelty. The regulatory landscape, basically non-existent. The infrastructure, Pretty fragile, actually.
This is way before Mt. Gox collapsed,
Yeah.
right?
Oh, yeah, pre-Gox. Pre any mainstream institutional interest, definitely pre-ETFs. So he had the vision, maybe, but also just the sheer nerve to hold on to his conviction through that Mt. Gox disaster, through the really brutal 2018 crypto winter,
Oh, that was rough.
through cycle after cycle of intense FUD, fear, uncertainty, doubt, times when the price just plummeted 80% or more.
And you just held.
He held.
Yeah.
And that duration, that commitment, it really reinforces the core message for strategic investors. Bitcoin isn't a short-term gamble. It functions like a strategic reserve asset, a store of value designed to ride out the cycles, maybe be held for generations. The fact that Durov successfully navigated all that volatility for a decade using Bitcoin as his main reserve, it just solidifies that whole OCHDL ethos, hold on for dear life, that's defined the community since day one.
Okay, let's dig into the numbers then. The quantitative side, because that's where this long-term appreciation story really hits home, right? We need to look at what holding from 2013 actually means in dollar terms.
Yeah, the scale is hard to grasp sometimes.
Even if we're conservative, let's say Durov bought later in 2013, maybe when the price spiked near, what, $1,000? Which felt huge back then.
Astronomical at the time.
Even from that point, the appreciation over the next 10 years is just immense. And if he got in earlier that year when it was maybe double digits, well, the returns are just, off the charts. That appreciation is the engine that created and sustained his financial freedom.
Had to put that into perspective for, investors listening. Let's talk compound annual growth rate, CAGR. Now, the exact number depends on his entry point, obviously, but Bitcoin CAGR since 2013, it's easily in the triple digits per year, even factoring in those massive crashes.
Triple digits, wow.
Now, compare that to traditional benchmarks, good ones, right? S&P 500, maybe its 10-year CAGR is around 10-12%. Gold, historically, maybe 5-7%. Bitcoin's performance is orders of magnitude higher. It wasn't just a good investment. It was, frankly, an unprecedented way to accumulate wealth over that period.
Okay, the numbers are staggering, I get it. But I have to push back a little here. For someone listening today, isn't Durov's story maybe a bit misleading? I mean, he got incredibly lucky, right? Entering before everyone else, before the infrastructure, before the massive price run-ups. We really need to dissect this. Is this a blueprint anyone can follow now, or is it just a fascinating case of survivorship bias, extreme luck?
That's the absolute critical question. And I think the answer, or part of it, lies in understanding how long-term holders behave. And we can actually track this now with on-chain data. Durov's success might be amplified by early entry, sure, but his conviction, that's mirrored across the network. We can look at things like HODL waves.
Okay, explain HODL waves briefly.
So HODL waves, they basically show the percentage of all Bitcoin that hasn't moved, hasn't been transacted in specific timeframes, like 5 years or more. And what we've seen consistently is these long-term waves getting bigger, steadily increasing. It means a larger and larger chunk of the total supply is being locked away by these strategic holders, people who see it as generational wealth.
So Durov isn't alone in this thinking.
Not at all. He's just the most public and arguably one of the most successful examples of this huge global trend.
Yeah.
This move towards long-term scarcity appreciation.
And what about that other metric you mentioned, the realized cap HODL ratio, or RHODL? That sounds more technical. Can you break that down? How does it show conviction?
Yeah, sure. So the realized cap HODL ratio, or RHODL, it's basically an indicator that tries to gauge market conviction. It compares the market value attributed to short-term holders versus long-term holders. Essentially, it tracks the ratio of the price when coins last moved for recent buyers versus the price when coins last moved for old hands, the long-term guys. It gives you a sense of whether the market is maybe overheating, driven by speculation, or if it's got a strong foundation of conviction.
So when RHODL looks strong...
When metrics like the RHODL band show strength, it suggests the market's foundation is being held firm by the true believers, the people whose time horizon isn't months, it's decades. Durov's behavior, his actions over the last 10 years, he's the living embodiment of the conviction these on-chain metrics try to capture. He's like the ultimate poster child for this growing global financial strategy.
It really is fascinating how that philosophy, the decentralization idea, seems to be backed up by cold, hard data. But Durov, he's not acting in a vacuum, right? His actions seem to align him with this broader group of tech founders who are tying their own fortunes, and sometimes even their company strategies, to crypto.
Definitely. It's a pattern.
We all know the kind of influence tech entrepreneurs have in crypto. I mean, look at Elon Musk and Dogecoin, maybe more cultural, but still influential. Or Jack Dorsey's very philosophical stance on money's future. Durov fits this mold, but his approach feels different, More credible, maybe. Because it's not just talk or an endorsement, it's a lived reality, a self-sustaining financial life. It proves the value of that builder's hedge idea.
Yet that pattern, the builder's hedge, it's becoming almost standard practice among, let's say, forward-thinking founders. Doesn't matter if they're leading big Web2 companies or starting new Web3 protocols. They use Bitcoin as a core personal reserve because they get it. They understand that the tech they're building, communication tools, payment systems, DeFi, might eventually disrupt or even directly clash with the established financial and government structures.
So Bitcoin is like their financial escape hatch.
Kind of. It's a safety net. It guarantees their personal independence and keeps their incentives aligned with decentralization, even if things get politically or regulatorily messy.
Okay, let's look at some other examples then, some case studies. How does Durov's very personal strategy compare to maybe more corporate or public approaches?
Good idea. Let's contrast a few.
Okay, start with CZ, former founder of Binance, biggest crypto exchange, arguably. His personal wealth positioning tells a story about founder belief, right?
Absolutely. CZ has been public about it. The vast majority of his personal net worth, not in fiat currency, not in dollars or euros, it's dominated by crypto assets, specifically Bitcoin and BNB, Binance's own token.
That's not just dipping a toe in?
No, it's not a casual allocation. This is a founder who essentially divorced his personal liquidity from the traditional banking system. Now, his strategy is a bit different from Durov's. It's more tied to the industry he built, but the core principle, it's the same. Deep belief that decentralized digital assets are the better way to hold wealth long-term, even for managing huge personal fortunes.
Okay, then there's Jack Dorsey, Block, formerly Square. His conviction seems almost philosophical. It's not just an asset for him, it's like future infrastructure.
Exactly. Dorsey sees Bitcoin as the internet's native currency, full stop. So for him, it goes way beyond just investing. It's about building the infrastructure on Bitcoin. Block is actively incorporating it into future payment systems, focusing on things like the Lightning Network, self-custody tools.
Because he's building on top of it.
Right? His strategy is about building the future on Bitcoin. That's a structural conviction that validates the asset's potential longevity far beyond just its price today. So while Durov used Bitcoin to secure his personal ability to build Telegram, Dorsey is building his huge company around Bitcoin. Different approaches, same underlying belief in its foundational importance.
But maybe the closest parallel on a corporate level to Durov's individual sovereignty path, that's Michael Saylor and MicroStrategy, isn't it? That massive corporate treasury pivot.
Oh, absolutely. Saylor did something astonishing. He took billions of MicroStrategy's corporate cash reserves and put them into Bitcoin.
And his reasoning was key.
Crucial. Saylor basically argued that holding fiat, holding dollars, was like holding a melting ice cube. Constant monetary inflation made it an untenable long-term asset. Bitcoin, despite its volatility, was the superior store of value. Today, MicroStrategy's Bitcoin holdings are worth, well, tens of billions. This strategy, it mirrors, but at a corporate scale, the exact same need for a non-sovereign wealth tool that Durov identified years earlier for himself. It's like an institutional version of the individual builder's hedge.
It's pretty remarkable how that individual path, Durov seeking personal freedom, kind of echoes what some nation-states are trying to do now. We should probably touch on El Salvador briefly.
Yeah, it's a fascinating parallel.
El Salvador's move, adopting Bitcoin as legal tender. The stated goal was explicitly about gaining more financial sovereignty, right? Getting a hedge against their own currency's instability, getting some independence from global institutions like the IMF or World Bank.
At the macro level, the nation-state level, El Salvador is essentially attempting the same strategic financial hedge that individuals like Durov proved could work for them years ago.
It's the same principle, scaled up.
And we probably shouldn't ignore just the parallel rise of decentralization itself. Think about Telegram's journey. Global app, known for security, privacy, resisting censorship. Now, overlay Bitcoin's history. Price appreciation, resilience against attacks, providing financial autonomy. They've kind of risen together, haven't they? Both feeding this global hunger for independence, Telegram for communication, Bitcoin for finance. Their simultaneous success suggests something fundamental about what people want.
That's a great way to frame it, that structural overlap. Okay, let's pivot now. Let's talk direct implications. For you listening, the everyday investor, the Web3 builder tuning in. What's the signal? What actionable message does Durov's decade of success send out?
Well, I think the signal to the broader market, especially for anyone thinking long-term, is pretty clear. If Bitcoin served as a reliable, sufficient long-term hedge for someone like Durov, a global visionary for a whole decade, weathering every single storm the market threw. It strongly suggests the asset might still be fundamentally undervalued for strategic long-term allocation.
Meaning its potential isn't fully priced in yet?
Potentially. It indicates that its adoption curve, specifically for its use as a strategic reserve, might be far from over.
Okay, and what about for the Web3 builders? People actually creating decentralized systems?
Oh, for them, the implications are even more direct, more tactile. Financial sovereignty is just essential when you're building in that space, whether it's DeFi, DAOs, privacy tools, whatever. Building in Web3 inherently challenges the established structures, legal, financial. So having financial independence secured through assets like Bitcoin, it becomes critical. It ensures your project can continue. It helps you weather regulatory storms or political pressure. Bitcoin stops being just a passive investment and becomes a vital tool in your risk management kit.
Like operational insurance.
Exactly. And this relevance, it goes beyond just the elite founder class, right? Durov's story highlights Bitcoin's practical use as just highly portable wealth. In today's world, with geopolitical tensions, rapid economic shifts, the ability to secure your wealth and move it without relying on physical assets that can be seized or bank accounts that can be frozen, that's a tangible benefit. It's a form of financial insurance against instability that goes way beyond just potential investment returns.
So we're really seeing the asset mature, transition fully. Durov coming out and confirming this adds huge legitimacy, especially within that high-level tech culture. It confirms that shift, doesn't it? From the experimental kind of fringe cyberpunk money of 2013 into something verified, a mature wealth preservation tool used by global elites, strategic thinkers.
It completely changes the psychological profile of Bitcoin. When someone like Durov publicly confirms this level of reliance on it for his own life, the perception shifts. It can't go back. It validates this long-held economic idea that non-sovereign, digitally scarce value is a superior long-term foundation for wealth. And now it's not just theory. It's validated by real-world success through the absolute toughest market conditions you could imagine.
Okay, his success story is powerful, undeniable. But now we absolutely have to bring in the counterpoints, the critical assessment. We can't ignore the risks. We can't pretend everyone listening has Durov's resources or his, frankly, seemingly infinite tolerance for risk, volatility. We have to tackle that directly.
Absolutely crucial for a balanced view.
The main counterpoint has to be, for the average person, Bitcoin is still intensely volatile. We've seen it drop 80% historically. Regular 50% corrections happen in weeks, sometimes months. Now, a billionaire who bought way back in 2013, he can probably shrug off a 50% drop because his overall gains are still massive. But for an average person, relying on that capital for, say, retirement next year, that kind of drop can be utterly catastrophic.
And this is where that idea of testing conviction really comes in. It's paramount. Those long bear markets, think 2018 through 2020, they are brutal tests of mental fortitude. This is the great filter, the separator between strategic, long-term holders like Durov, who somehow managed to tune out the daily noise and focus on the long game, the scarcity narrative.
And everyone else.
And the short-term speculators, or even just regular investors who get scared. Most people facing those kinds of sustained losses, they understandably panic. They sell low, lock-in losses, and they never see the long-term compounding benefits. Durov's success isn't just technical foresight. It's a testament to an iron will.
That psychological strength is key.
Definitely. And related to that, we have to mention diversification, please. Having high conviction in Bitcoin is one thing. It can be strategic. But basic, sound financial planning principles, they still dictate you shouldn't ignore diversification. Putting everything into any single asset, no matter how revolutionary or amazing its performance has been, that introduces concentrated risk. Unmitigated risk. Financial wisdom still says you need to balance something like Bitcoin with other, less correlated assets to manage your overall risk exposure.
Okay, so let's try to synthesize all this. For you listening, what are the core lessons we can actually pull from Durov's incredible decade-long Bitcoin journey?
I think there are a few key takeaways.
First, it seems like time horizon is everything. If you look at Bitcoin as a short-term trade, maybe a 5-year flip, you're basically just gambling at high stakes. But if you approach it as a 20-year, maybe longer strategic reserve, then you're starting to mimic the behavior that this major global visionary proved could work.
That's number one. Number two, the absolute necessity of rigorous security practices. Self-custody. Durov's entire financial independence hinges completely on his ability to secure his own private keys, manage his holdings with extreme care. Financial sovereignty comes with total personal responsibility for security. There's no bank to call if you mess up.
High stakes there, too.
Very high. And finally, number 3, unwavering conviction, but conviction rooted in a philosophy. His story powerfully reinforces the idea that if you truly believe in the decentralized philosophy, in the mathematical scarcity, you then have to cultivate the mental strength, the fortitude, to ignore the daily market chaos. That conviction seems to be the defining human element that turned his early bet into a decade of financial and personal freedom.
That sums it up really well. Durov's personal story, it absolutely showcases Bitcoin's path into mainstream legitimacy, highlighting it not just as a wildly successful investment, but as a proven tool for long-term wealth preservation and, maybe just as importantly, for personal liberty in a world that feels increasingly regulated.
Yeah, the primary takeaway, the thing we really want to leave you with, is that Durov's decade-long commitment. It reinforces the structural argument. Bitcoin acts as a strategic reserve. It moved way past being just a speculative toy years ago. It's now a demonstrated hedge against inflation, against government overreach, and against the inherent instabilities within the traditional financial system.
Okay, so as we wrap up this deep dive, here's that final provocative thought we want to leave you mulling over. Something based on the critical discussion we just had. Does Pavel Durov's financial life definitively prove that Bitcoin is a reliable, long-term wealth tool for everyone entering the market today? Given the current prices, the market size?
Or is his success mostly an extraordinary, maybe unrepeatable example of historical survivor bias? Unique luck. Was it only really accessible to those who had the foresight, the resources, and the sheer nerve to get in an HODL before the institutions arrived and fundamentally changed the game?
Apply that critical thinking. Use the material we've analyzed. Look at the HODL waves. Consider the volatility now versus then.
And decide for yourself, do you have the necessary time horizon, the security discipline, and maybe most importantly, the conviction to potentially follow the path of the ultimate Bitcoin HODler?
Until next time, keep digging deep into the sources.